across the globe. This is Jeff Killian for the Vector Traders Consortium, VTCtraders.com. And tonight we're going to get an inside look, get behind these prices and look to discern with a high degree of accuracy exactly where this market's going to be going in the near-term future. We're going to use the S&P 500 E-mini futures as a proxy for the analysis for this short video. For those of you who are looking for an opportunity to learn how to trade, and for those of you who have been trading for a long time, everybody needs to understand what is the current state of the US market right now, and where can we be going within the next session, on the outside, possibly 3 sessions, no more than that, so that we can take advantage of these moves and trade either stocks, index funds, ETFs, futures real time, with a greater degree of profitability. That's what it's all about, right? Turning things to green. So looking at the price levels, there is new blue skies prices that were again traded above, and in this case closed above 47.0525. This is critical because if it was another blow off to the upside, as in here, which presented itself right on 11.22, the prices would have turned back around and closed down, clearly signaling that, you know, that's it, close to a double top, and now that's it, prices should trade down. At this juncture here, prices traded up on inflated highs because the volume dried up here. So the down move that took place when prices got through on a reversal that came through in 11.26 here, below 46.42 flat, was the key to prices getting down to this level here. No downside resistance price-wise, no downside resistance, strong POCs to stop the price from falling to right around this level here and possibly lower, but they did land here and then started to trade back up. Because of time restraints, we don't have what we need for the window to go into all the negative divergences that existed at this point. We probably have time to show one of them, but the key to the negative divergences compared to these prices here before they fell off in multiple time frames, multiple divergences in multiple markets, once again clearly signaled, like we called the reversal most recently here and way back on the course material, that this was going to happen. It was just a matter of getting in at the right time, at the right place, and riding things down to an existing price profit target area, such as the 45.35.50 level. So here's the key. Where are we going now? Volume increases, prices trade up, we close above this level here. In isolation, a very good sign. However, if we get into the MFI, the money flow index, which clearly shows what the short-term smart money is doing, the largest institutions that move the prices from one level to another, that we don't have that trend line violation yet to the upside. We're off of an internal base level here, but the upward movement on a closing basis has not taken place yet. Now, things are going to change dramatically when 6 p.m. Eastern Standard Time comes, when the new overnight session opens in futures. So that trend line violation could take place, and it might not. Depending upon what happens out of this, my interest is, then what will the aftermath of that be? Prices will either trade up again into new blue skies again and again, or possibly not. It largely depends on this critical juncture right here. Longer term money is a different story. Looking at the CMF, the trend line violation is already there. So what does this say in isolation? That there's higher probabilities that the market has already handed off the baton from the short term to long term money. Touched on the negative divergences earlier. This is not an official because of the interruption here, but look at the difference in the lower prices and the higher price here as compared to the trend line here. Lower price, higher price, equal, if not lower, in this case, peak. And then again here, from here to here, we did get it. Another negative divergence. If we look at the prices from here to here, right, as compared to these indicator levels when it fell off to this point. Again, clearly signaling that the pent-up selling pressure that was behind the prices just hadn't taken place yet in the form of the future directional price moving to the downside. Other than that, the chicken oscillator, which is clearly pegged to the mathematical computation of the MACD is up and up and up. So the probabilities in isolation, technically speaking, your visual roadmap, are saying that the price should continue to trade up. It's all going to depend on what the overnight session does, especially more than likely when the European session kicks in at 3 a.m. Eastern Standard Time. So are there more dots to connect? Obviously. These are the basics that are behind trying to get behind what the prices are doing and discern when and where do you, as a new person or a seasoned professional, have any serious business trading or not. And in this case, you should be trading your minimum amount of contract shares, ETF blocks. That's it, until things become more clear. Remember, people, the key to longevity in trading is risk mitigation. That will never change. So when we're at a critical juncture like this, we need to tighten up. If not, stay in the sidelines, go flat until things become more clear. This is what I want everyone to see tonight. And it's all going to play out next week, which is fantastic for all of us. We're either going to make a lot of money long or we're going to make a lot of money short. The other information that's needed in order to be able to go forward with this and use it on a daily basis can all be found within the completely newly redesigned S&P 500 E-mini Futures Expert Market Timing course. We spent 2 weeks, an exorbitant amount of time, intellectual property, and money to get this up to speed so we could bring you a superior product. All the modules, all 7, have audio explanations and text behind them too. One winning trade, 5,100 on YM, I think it was long. Here's a risk mitigation example. Real life testimonials like that from Larry Jacobs, editor of Traders World magazine, signed off on. Others all signed off on. What else? I'm not sure. Should cover it. I mean, price should be irrelevant. Can you put a price on something like this? No, but there is one. The live event was around 3,000, 24.97 exactly, and now it's only 14.97. So this is a stepping stone. This is a way to open up a door to walk into another dimension of trading. This is what I want for everyone. I have worked my entire life trading almost every day to deliver over in a fully transparent manner what everyone needs to get the information that only a handful of traders will ever have. This is Jeff Killian for the BTC. We'll see you on the next rec. I hope you like what you saw today. Be careful out there.